Top three things this morning. Number one, fund flows. Number two, the 10-year bond yield. And number three, that old price of oil going into Memorial Day weekend. I am excited about the weekend, by the way, just not about what I'm going to have to put into my car. Flows, fund flows, fund flows, fund flows. There's a lot of fund flowing into the equity market, so just follow the bouncing ball. As consensus comes our way and starts to get concerned about what bond yields have been telling them throughout the year, that growth is coming lower, not higher, people go into slow growth, so they flow the funds into bonds. Last week, you saw $3.9 billion of inflow into fixed income versus the year-to-date average of $2.1 billion in weekly inflow. So again, above what's been a pretty healthy inflow for the year-to-date, despite consensus thinking that interest rates are going up, which of course they're not. They're going straight down. And the other part of that is that the equities had outflows. Yes, outflows. So people, when growth slows, they sell growth stocks and they tell their money manager to take the money out of the growth stocks and put it into bonds. So you saw $1 billion in outflow versus a plus $3.1 billion inflow average for equities. So again, a horrendous week in terms of outflows on the equity side. Second point, obviously 10-year bond yield. So 10-year bond yield, 10-year bond yield, 10-year bond yield. We can talk about this every day. I was in the car on the way in, and Tom Keene says, it's fascinating. You know, the 10-year bond yield is down, and nobody saw this coming. I mean, nobody. As long as we just admit that we're all just going to navel gaze and nobody called this, that's fine. But the reality is that plenty of you did. 10-year bond yield's going lower because risk is obviously baking itself into the cake, that growth is going to surprise on the downside. So again, 10-year bond yield, unless it can get back above the tail risk line of 2.61%, there's absolutely no reason to stop buying bonds on the dips, which would include today. Finally, the price of oil is ripping to the upside. Not yet at a year-to-date high, but pretty darn close into the Memorial Day weekend. So again, food's up, rent's up, oil's up. You know that this constitutes a large percentage of what the average consumer in this country has to spend. And yes, that's called inflation accelerating. And yes, inflation accelerating in real terms slows growth. 71% of the economy is consumption growth. And those are your top three things.